Investors often turn to gold as a safe haven when the economy or the unstable stock market is struggling. With inflation rising and the stock market at all-time highs, some investors seek a secure asset with a proven track record of increases, and gold fits the bill. Gold is popular among savers and investors for various reasons. Its characteristics make it a viable alternative to standard assets such as equities and bonds. They see gold as a store of value, although it is an asset that does not provide cash flow. But you may wonder, how can I invest in gold? Hello and welcome to today's video, where we will discuss different ways you can invest in gold. Let's go ahead and take a look at the different ways in which we can invest in gold. Stay tuned and catch the last 3 methods since they might be the most lucrative for you. Number 8. Gold futures. First on the list, we have gold futures, something many people might wonder what it is. Well, gold futures are contracts to purchase and sell gold at a certain moment in time. Each contract represents a precise quantity of gold and, depending on the terms, may pay out in either dollars or actual gold. Because gold futures contracts may be quite big, this technique best suits investors with the cash to acquire high-valued contracts. There are also gold futures alternatives to consider. This gives investors the option of purchasing a futures contract at a predetermined price at a later date. Options may enable purchasers to leverage their original investment. Still, they must pay the underlying gold value to truly own the option. Gold futures and options are volatile, making them more difficult to enter and handle than other gold investments, which you will see later in the video. Number 7. Gold bullions. Buying gold in bars is one of the most emotionally fulfilling methods to possess. You'll enjoy the gratification of gazing at and handling it. Still, if you possess more than a little portion of it, there are major negatives. One of the most significant disadvantages is the need to protect and insure actual gold. To benefit, owners of actual gold must rely entirely on the commodity price growing. In contrast, owners of a firm, such as a gold mining company, may generate more gold and hence more profit, pushing the investment in that enterprise higher. You may buy gold bullion in various ways, including via an online merchant like APMEX, JM Bullion, or at a local dealer or collector. A pawn store may sell gold as well. Keep track of gold's spot price, the price per ounce in the market right now, as you purchase so you can get a good bargain. You may wish to trade in bars rather than coins, since a coin's collector value will likely outweigh its gold content. However, there are a few risks to this method. The greatest danger is that someone will physically steal your gold if you do not secure your possessions. If you need to sell your gold, the second largest danger arises. It may be difficult to get the full market value for your possessions, particularly if they are coins and you want money immediately. As a result, you may have to settle for selling your shares at a significantly lower price than they would otherwise fetch on a national market. Number 6. Gold coins. You may be aware of the popularity of gold coins due to infomercials and other marketing. This method of purchasing and selling gold is well known. Because of its smaller size, it is typically more convenient than gold bars. Investors may buy gold coins from collectors or private sellers and sell them for a profit later. Most towns have dealers, making gold coins easier to get. Gold coins are one of the finest options for beginners to invest in gold due to their simplicity of purchasing. You may sometimes come across gold coins that have been overpriced owing to their collector's worth. The collector's value might make them more valuable than the gold's basic value. Unless they want to become collectors, most casual investors will shun these and concentrate on more frequently circulated coins. The American Eagle and the Canadian Maple Leaf are 2 well-known examples of credible collectors that you can work with. Number 5. Gold jewelry. Gold jewelry is arguably the most often purchased and sold type of gold investment, though you may not think of it that way. In reality, since gold jewelry is so simple to get, it is ideal for beginners. According to Investopedia, jewelry accounts for around 49% of worldwide gold manufacturing. Generally, any item of jewelry that is 14K or greater is considered a gold investment. While it is pretty easy to get, there are certain disadvantages to be aware of. In certain circumstances, the resale value of gold is unclear. Finding a customer and selling your jewelry for a profit may be challenging. Number 4. Gold ETFs and mutual funds. Did you know that gold ETFs and mutual funds exist? If you are an investor, have you ever thought of trying them? Actually, they are a good option that you might want to try. Gold exchange traded funds, ETFs, and mutual funds are accounts that buy gold on behalf of investors. These funds' shares represent a set quantity of gold and may be purchased and sold like stocks. This is one of the greatest methods to invest in gold, since ETFs and mutual funds enable investors to work with gold without incurring the fees associated with actual ownership, like security or gold insurance. There are expenses connected with purchasing and selling gold via ETFs or mutual funds. Still, they are sometimes substantially cheaper when compared to other asset management fees. It is important to note that ETFs and mutual funds dealing with gold sometimes invest in other commodities, so you will seldom find a business that just deals with gold. This may be advantageous if your objective is to diversify. However, it may need to know about other markets besides gold. When contemplating ETFs or mutual funds for your gold investment, be prepared to do more research to invest where you feel at ease. Before we can enter our top 3 investment methods, we would like to give a massive shout out to you guys for watching this far. If you are enjoying the video, give it a thumbs up, and don't forget to subscribe to the channel. With that done, let's go to the top 3 ways you can invest in gold. Number 3. Gold certificates. Gold certificates are notes that verify ownership of the given quantity of gold given by a company that owns the gold. Some banks and financial firms still offer gold certificates that grant the bearer ownership of a part of their gold assets, formally issued by the U.S. government as a currency equivalent. Gold certificates provide investors with direct exposure to gold prices. They are, however, only as secure as the underlying firm providing the certificate. If the corporation goes bankrupt, the gold certificate may lose its value. But this still falls under one of the safest ways to invest in gold, since with a reputable firm dealing in the sector with proven results, you might get the most vital thing in any investment you can ever make: security. Number 2. Streaming and royalty companies. Another approach to investing in gold via stocks is through streaming and royalty firms. These firms will pay mining corporations cash upfront in exchange for the right to acquire gold or other commodities in the future. Consider them to be financial corporations that get their earnings in gold. This kind of investment also necessitates that innovators understand more about the hazards of gold mining and the firms involved. For others, the amount of research necessary to properly invest in streaming and royalty firms may be a barrier to entry. Number 1. Gold stocks. Companies involved in gold exploration and mining are represented by gold stocks. They also include gold streaming and royalty firms, one of the ways you can invest in gold, as we have just seen. Gold miners provide the highest upside potential for investors. They may make investments to increase output, for example, developing new mines, expanding current ones, and acquiring another gold miner, allowing them to outperform the price of gold. They may also pay a dividend, providing investors with a source of gold-based income. Because investors may readily purchase and sell gold stocks via a brokerage account, gold stocks are very liquid. There are, however, hazards linked with investing in gold through gold miners. Overruns in costs, poor management, and excessive debt may lead to a gold mining company to underperform the gold price. Many also mine other resources, such as precious metals like silver or other metals like copper. While diversification decreases risk, it may diminish the benefit of increased gold prices. Meanwhile, gold streaming and royalty firms provide money to gold miners to help them build and expand mines. They either get the right to buy gold at a predetermined price, streamers, or a percentage of gold earnings, royalties, lowering their risk compared to gold mining stocks. Well, that wraps it up, guys. Tell us which way you think suits you best in the comments section. Until the next video, peace out.